Hey there, in this video I'm going to break down and reveal my entire diversified penny stock portfolio, which as of the time of this recording is worth over $1,200 and has 25 individual penny stocks in it. Now what I'm going to do in this video today is first of all show you my entire penny stock portfolio, talk about the return on investment I've experienced so far, and also discuss how I selected the penny stocks that I'm currently invested in. Next, I'm going to talk about the 3 worst performing penny stocks that I've invested in over the last couple of months. I'm going to discuss what those companies are and why they're underperforming. And then finally, I'm going to go in depth into the 3 best performing penny stocks that I've invested in so far. Since the entire portfolio has 25 ticker symbols in it, I figured this would be a good way to give you a sense of what I'm invested in, but also to focus on some of the more interesting things. All right, so let's get into it. Now, as you'll see here, this is my personal portfolio on Wealthsimple, and this is what I'm using to invest in penny stocks exclusively. As you can see, the total value of the portfolio right now says that it's $1,642, but I have $370 in cash, so not all of that is invested. The amount that I have invested is just over $1,250. Since I started this experiment back in June, I have netted a 1% return on investment so far, although that's unrealized. So I have $22.58 in unrealized gains on this diversified penny stock portfolio. Now, before I break down what I'm invested in, first of all, I want to discuss how I selected these 25 ticker symbols. And if you haven't seen any of my previous videos about this topic, which I'll link a couple of them up here, but I've invested in completely random penny stocks, and there's been a few ways that I've done that. The main method that I used was to run a search for penny stocks trading on Canadian stock exchanges, and then I used a randomizer function to randomly select a bunch of them, and I just invested $50 each into every single penny stock that I selected. Another strategy that I used to find some random penny stocks for this experiment was to go to the YouTube search bar and type in best Canadian penny stock, and then I invested in 5 totally random ticker symbols that came up from the YouTube search results. So you might be asking, why would I invest real money into 25 totally randomly selected penny stocks? And fair enough, that's a good question. There's a couple of reasons why I'm doing this experiment. First of all, I thought it would be an interesting experiment because I've seen some articles suggesting that investing in random companies could potentially perform on par with the S&P 500 or other index funds, meaning that really, if you spend a lot of time, energy, and effort into selecting stocks and doing all kinds of due diligence, you might not actually see the reward from that above and beyond what you could get if you just actually invested in totally random companies. Now, granted, with penny stocks, it is a little different because these companies are much more likely to fail and to go under than your large cap, well-established household name companies like your Googles and your Amazons and your Facebook. That said, even in the Intelligent Investor, which is the definitive book on value investing, it says that having a well-diversified portfolio, even of potentially highly risky investments, is a winning strategy, or at least could be a winning strategy. And so that's what I wanted to test here, hence this experiment. Now, before I break down the 3 worst performing stocks and the 3 best performing stocks, let me just briefly talk about the portfolio as a whole. And for starters, I'm going to throw up here a list of the companies that I'm invested in by industry. So you can see that it's very heavily focused on the mining sector. I've got 8 ticker symbols or 8 companies that are in the mining sector. A lot of precious metals in there like silver or gold, also a uranium mining company, and others. There's a lot of junior mining companies in Canada, and actually the Toronto Stock Exchange is one of the capitals of the world for investment in junior mining companies. So that explains partially why I have such a high concentration of mining penny stocks. Aside from that, I have 5 companies in the tech sector or tech adjacent sector. For instance, I have Drone Delivery Corp of Canada, which is working on using drones to make deliveries, hence the name. But it's doing it more so on a B2B level, which could be potentially interesting. Then I've got 4 companies in the health sector, 2 companies in the retail sector, and that's Indigo Books and Roots, one of which I'll be talking about in a minute. Then I have 1 stock in the Mary Jane sector, which I'm sure you'll know what I'm talking about. It's very popular in Canada, and it has been so for the last couple of years. I have 1 manufacturing company, 1 venture capital firm, and 1 company that produces zero emission or zero waste packaging. So really, it is an interesting mix and an interesting cross section of the penny stock market in Canada. I'll scroll down here quickly so that you can take a look at all of the ticker symbols that I'm currently invested in. You'll see in these three columns what the price of the stock is as of the time of this recording, what the total value of the stocks that I'm holding is, and then the all-time return on investment of my purchase of those shares. Now at the portfolio level, you'll see looking at this that there's some high volatility in these penny stocks. There's a lot of companies that are going plus minus in the tens of percentages. So even though I started investing in these stocks just 3 months ago, some of them are up 50%, some of them are down 20%, and really there is a lot of volatility, which is of course to be expected with penny stocks. So of these companies, which ones are the most interesting to talk about? Well, let me start with the 3 worst performing stocks on the list. The first one is going to be this, Adventus Mining Corporation, which is a copper and gold mining company based in Canada that has a lot of interest in Ecuador, although it also recently sold a property, which I'll talk about in a second. Now, as you'll see here, the current price of the stock is at around 90 cents Canadian, but if I zoom out over the last 3 months, you'll see it's been steadily in decline. So I bought in somewhere up here, probably around $1.15, $1.14, and now we are down significantly, almost 20%. If we're looking at the fundamentals of the company, it's very small with a market cap of $120 million, and it doesn't pay any dividends. Now, what explains this rapid decline that the stock has experienced over the last few months? The main piece of news that I can find on this company is that it sold one of its properties in Newfoundland, Canada, to focus on de-risking its copper and gold business in Ecuador. Now, in terms of this being the catalyst for the stock's decline, I suppose it could be the reason, but it doesn't seem like there's anything that's really changed fundamentally about the business, so this might just be a market cycle kind of thing. Regardless, this is one of the worst performing penny stocks that I've invested in, and I've lost around 20% so far. Next on the list is this company, ticker symbol AEZS, or Eterna Zentaris Incorporated. Now, as you'll see with this company, it's kind of a similar story. It's currently trading for about 90 cents Canadian per share, but if I zoom out over the last 3 months, you'll see a steady decline in the price of this stock. Now, what does this company do? Well, it's a biopharmaceutical company that does therapeutic testing. More specifically, it's developed a test for adult growth hormone deficiency. They've got this interesting infographic on their website where you can see the development pipeline of their different products. So you can see that the growth hormone deficiency testing product is in commercial use phase, but all of the other ones are preclinical. The ROI on my investment in this biopharma company so far is around negative 18.75%. So not good. Now, like the Adventus Mining Corporation, I was curious to see if there was any reason for the rapid decline in the price of this stock. The company recently reported their second quarter earnings and they lost around $2 million overall, although they do seem to have solid cash reserves. And while their revenue growth is minimal, that's obviously because they're a company that's working on a number of products that are in the biopharmaceutical or therapeutic testing pipeline. And those aren't the type of thing that materialize in a day or a week. So we'll see what happens with this one. I'm down 20% so far, but I don't see anything to suggest that the fundamentals of the company have changed and or that it's something that I really need to be worried about. The third worst performing stock that I want to talk about is Roots Corp of Canada. Now, if you're Canadian, you'll probably have heard of this company. They produce this iconic apparel and lots of people still wear it and love it. I'm personally a huge fan of the product, but as an investment opportunity, I'm not so sure. Over the last 3 months, you can see a pretty steady decline. At the end of June, it was trading at well over $4 a share, but has since dropped to $3.29 today. My overall investment is down around 17% so far. So what explains this? Is the Roots company going out of business, and am I going to be a bag holder on this one? The only news over the past few months that I can find on the Roots Corp is the earnings report, which came out on June 11th. And actually, it's super positive. Total sales grew by 25%. Gross margins increased and profitability increased as well. That said, the company still experienced a net loss of $4.9 million. So obviously it wasn't enough to get it over the threshold into profitability. It's improving for sure, but it's still not out of the woods yet. And so I think that is probably what explains the slight decline in the price of the stock. This company's been around for a very long time. It was founded in 1973, and back in 2018, it was doing quite well. It was trading at around $11 up to $13 per share, and since has come crashing down. Now, a lot of this has to do with the drying up of the retail world, in-person shopping in shopping malls, and the shift to e-commerce and competing with e-commerce giants like Amazon. But I think that Roots is really an iconic Canadian brand, and I do have hope for the future of this one. Of course, if it does go under, I'm only holding a small amount of this as a part of a broader diversified penny stock portfolio, so I can't really shed any tears over it. Okay, now let's talk about my best performing investments in this penny stock portfolio. First of all, I want to start with this. It's ticker symbol RKS. It used to be called Rock Shield Capital Corp, but it's changed its name recently to the Eat Well Investment Group. So this company is a venture capital firm that specializes in agriculture, agribusiness, and food companies. The share price is currently trading at around 84 cents per share. And if I look at the 3-month chart, you will see that it's run up quite significantly since I bought in. My overall return on investment on this one so far is just under 20%, which is obviously great. So what explains my huge gain on this in such a short period of time? Well, aside for the name change, which I guess is exciting, but probably shouldn't matter at all, there's been a couple of acquisitions actually that this VC firm has made, and I think that must be what's driving the change in price. You'll see here from this article that they recently acquired 2 companies, Bell Pulses and Sapiencia. Now, I don't know a whole lot about these acquisitions, but I know that mergers and acquisitions is the type of catalyst that gets investors excited and could potentially have an impact on the price of a stock. Overall, I can't complain about the performance of this one, and I'm excited to see what happens moving forward. Next on my list is ticker symbol KSI, or Neat.com Incorporated. This company is a software as a service firm that manages data and documents from clients. So really, it's a B2B type of business. Shares in the company are trading at $4.22 Canadian as of the time of this recording. But if I zoom out to the 3-month chart, you'll see that since the beginning of June, it's really been running up. It was trading at around $3 back then and has since come all the way up to $4.22. Now, that means that my total investment in this company to date has appreciated by 40%, which is incredible, obviously, over the span of a couple of months. Now, what explains the over 40% appreciation in this company since I bought in? Well, of course, it's because they recently reported record revenues and gross margins after reporting their Q2 earnings for 2021. And as you'll see from this report here, their Q2 revenue was just insane, increasing 104% year over year. I'm not going to delve super deeply into the report itself, but essentially the company is retaining its old clients and is going out and acquiring a whole bunch of new clients, which is driving their revenue growth. Obviously, that's the type of growth that gets investors excited, and I fully attribute the rise in the price of the stock to this amazing Q2 earnings report. Okay, last but not least, the best performing penny stock that I've invested in this totally diversified portfolio is this one, ticker symbol DMGI, or DMG Blockchain Solutions Incorporated. What does this company do? Well, aside from the obvious giveaway in the name, the fact that it's a blockchain company, essentially it's a crypto mining company. Its core operations revolve around crypto mining. So looking at the stock chart, you'll see that it's $1.16 Canadian today, but if I zoom out over 3 months, it's really run up. It was trading at the beginning or the middle of July at 62 and then 58 cents, and has since come all the way up to $1.20. So the overall return on investment of this penny stock so far is just under 50%, 48.72% right now. Now, what explains this massive increase in value? Well, more or less, I've noticed that it's tied to the price of cryptocurrency, which makes sense, of course, because that's what their core business is. And so over the past couple of weeks and months, the crypto market has bounced back a little from some lows that it experienced at the end of May, kind of beginning of June. If I zoom out to the 1-year chart, you'll see that this company really does mirror the price of cryptocurrency. So back at February, March, when there was this massive increase in the price of Bitcoin and other cryptos, the stock peaked at $4.58 per share, has since come back down, but is bouncing back up along with crypto. So there you have it. That is my full diversified penny stock portfolio that's worth around $1,250 Canadian. But of course, there's been some really well-performing penny stocks and some terrible penny stocks. You'll notice that I do have some more cash in the account, and I'm thinking about interesting ways that I can experiment with this penny stock portfolio. So if you have any ideas of things that you're interested in seeing me do with this penny stock portfolio, don't hesitate to drop a comment down below and let me know. Other than that, I hope you enjoyed it. I hope you found it interesting. And if you want to follow along with this random penny stock portfolio, as well as some of my other content around investing, personal finance, and starting a business, please don't forget to drop a like on the video and subscribe to the channel. I'll see you next time.